Before Bitcoin, before NFTs, there was another digital gold rush. A time when websites without products were worth billions, and anyone with .com at the end of their name could raise millions overnight. It was the birth of the internet economy, and the explosion that almost destroyed it. This is the story of the .com bubble, the fever that nearly broke the internet. The year was 1995. The internet was new, wild, and full of promise. A digital frontier, and everyone wanted a piece of it. Investors poured money into anything online. Startups promised to revolutionize everything: shopping, news, dating, even dog food. It was the age of possibility without profit. And Wall Street didn't care, because the future was clicking faster than reality. The more websites appeared, the crazier the valuations became. Companies with no revenue were suddenly worth billions. Analysts called it the new economy. Old rules didn't matter anymore, just growth, clicks, and hype. Even TV anchors started quoting stock tickers like Yahoo and eToys. People quit their jobs to day trade from home, and the world's first generation of internet millionaires was born, overnight. Every week, there was a new IPO. Every stock was the next Amazon, and every 20-something CEO was suddenly on magazine covers. There were startups selling nothing but buzzwords: synergy, innovation, digital revolution. Companies bought Super Bowl ads without having a product to sell. Pets.com raised $300 million selling dog food online, and its mascot, a sock puppet, became a celebrity. The internet wasn't just a tool anymore, it was a religion. Banks made fortunes taking these startups public. Analysts hyped them up to keep the money flowing, and investors stopped asking questions. Everyone believed this time was different, that technology had rewritten the rules of economics. Stock prices doubled in days, tripled in weeks. On paper, everyone was rich. In reality, no one had made a cent. The market had become a casino, powered by dial-up internet. Then came March 2000. The Nasdaq hit 5,000 points, and suddenly, the bubble popped. In a few months, trillions of dollars vanished. Startups collapsed overnight. Thousands lost their jobs, their savings, their dreams. Pets.com died. Webvan died. eToys, Cosmo, Go.com, all gone. It was the first mass extinction of the internet age, and the world woke up from its digital hangover. The crash was brutal. Office chairs were left in the streets. Stock options became worthless. And the same media that once worshipped these startups now called them fools with money. But in the ruins, something survived. A few names, Amazon, eBay, Google, crawled out of the wreckage. They had real products, real users, and patience. While everyone chased hype, they built systems. By 2003, the survivors were stronger than ever. The dot-com crash didn't kill the internet. It purified it. It separated fantasy from foundation. The money was gone, but the innovation stayed. And the next wave, social media, smartphones, streaming, was built on the bones of the bubble. But did we learn anything? Because 20 years later, the story repeats. Crypto booms, meme stocks, AI hype. The cycle continues. Every generation believes their bubble is different. But markets have memories shorter than tweets. And human greed? It's still the same code running the system. The dot-com crash wasn't just about money. It was about belief that technology alone could replace logic. It almost broke the internet, but it also built the world we live in today. So next time you see a revolutionary new idea promising the future, remember, the last time it came with a sock puppet and a $300 million bill.